Hello and welcome to Kapital, the community of holders and seekers of African capital. I'm your host, JS, and as always, before we start, we're going to continue with our word of affirmation, our guiding principle, the production function, by Cobb Douglas. All right, guys, as we always try to emphasize in this community, on our way to make Africa great again, we need to focus on creating more output in an efficient way. So today, the uh, subject matter of the talk will focus on the productivity factor here through the financial system and infrastructure. And it's through this article from CNBC Africa by AB Agina. He's an anchor and producer, I believe, for CNBC. I don't believe he's a producer and anchor at CNBC Africa. As Africa assumes G20 leadership, strengthening Africa financial systems key to global financial reforms. So it's the G20 flags of countries. Global financial architecture is once again under scrutiny and calls for reforms rolled out. For Africa, this conversation has never been more urgent. The continent faces a host of economic challenges: debt sustainability, limited access to credit, high borrowing costs, and inadequate financial infrastructure. Actually, it's basically inexistent in most areas. Issues that global economic disruptions have exacerbated, which is true. The war in Ukraine, COVID-19, major impacts. As Africa pushes for greater inclusion in global financial reforms, most notably with the African Union's recent membership in the G20, now G21, it is clear that building a resilient financial system within the continent must be a parallel priority. Actually, it should be, in my opinion, it should be a foremost priority, not a parallel. We need to start there. And for us guys, we're going to start actually, let me just try to go up here. The G20. What is the G20? Who are they? Where are they coming from? So this is the map of the countries, of the member countries. In red, you have the member countries. So you have the US, Canada, Mexico, Brazil, Argentina in South America, South Africa, were the only country on the continent that was member until the African Union was introduced in 2003 as a permanent member. We have Australia, New Zealand, China, India, Russia. So all the big guys are here. Interestingly, Spain is a permanent has a permanent invitation. It's not a permanent member. I don't understand why. And the purple countries are members through the European Union. So all green here, guys, before 2023, weren't part of the forum, right? So the G20 basically is the forum of major it's an intergovernmental forum. Um, they reunite once per year since 2002, 2000, mid 2000s. The group started actually in the mid 1990s. So before that time, guys, Africa weren't part of any of those discussions. So we didn't know what was going on. We didn't have a place at the table. The continent was busy. Like this huge swath of land was not part of the G20 or the economic power or potential, I guess. But it's fair. So now that's the G20, right? Those are the countries. And what I wanted to share with you guys, actually, in my opinion, are the impacts of the African Union being part of the G20, the membership. I've identified five of them and ranked them by importance. You'll let me know in the comment below what you think. But the first will be the investment in economic growth, as well as that digital transformation. So I have attributed 25% and 40 and 20, so 45% of for the two. In my opinion, they're related. Those two, you know, they're interchangeable. Oops. Yeah. So those two are related, because um, so for economic investment, we need with the B20 being part of the G20 will enhance Africa's visibility, for investors and multinational corporations. As I said, will be there at the table because the G20, you have the head of state, the secretary of the foreign affairs, or the secretary of finance, as well as I'm sure business leaders from each countries. So if you're there, you'll be able to see those guys in their eyes, shake their hands, present your project face to face instead of sending a PowerPoint. You know, it will increase the infrastructure financing from major economies. We can advocate for fair trade policies by being part of it, and promote industrialization and economic diversification instead of being only a continent of commodity, of extraction. We need to produce more. And this is an opportunity for us in terms of digital transformation. We all know that we need massive investment in roads, rail, in digital payments. Through the G2 membership, we'll be able to unlock new partnerships in tech and AI. We're certainly lacking in that domain. For financial inclusion, we'll encourage more public-private partnerships in infrastructure projects. We actually already discussed that topic here on the channel. If you guys are familiar, the video will be somewhere. So the other point will be a stronger straight position. Oh my God, hold on. Let me just go back to the circle. Stronger trade position, as an African nation will be able to negotiate better deals, reduce unfair restrictions to the deployment of capital throughout the continent, and with the African free continental trade. No, it's the African continental free trade area. After, we can use that to promote um, uh, used after as a key driver for regional and global trade. So those are the avenues that we can take. Um, Furthermore, we'll have climate action and energy investment, which relates to we could push for more climate financing. They have those bonds now, the climate bonds, fairer energy transition policies. The G20 will be able to support us for renewable energy projects, the ESG as well. We've discussed that on the channel already. We'll be able to reduce our dependence on fossil fuels through that technology and put more pressure on wealthy nations to honor their climate commitments. They're talking about 100 billion a year. That's a huge pool of money that we can use to promote investment on the continent. And the final point that I've attributed only 15% is the debt relief, because in my opinion, objective should not be our debt relief should only be through increase of debt servicing. So debt income, yeah, more income. So let's produce more income, we'll be able to pay our debt. So that's why I attributed 15%, but still it's an important point because we know we have a high debt levels. So especially to China, the World Bank as well. So with the G2, we could push for better debt restructuring programs and lower borrowing costs. Borrowing costs and restructuring are key issues, on the continent. And we can demand more global financial institutions. We can have a say, right, in global financial institutions like the IMF and the World Bank. But for us to achieve all that, right, this is a huge undertaking, right? There are some challenges that we need some hurdles that we'll need to cross. For example, we'll need to speak with one voice, in my opinion. African leaders will need strong coordination within the G20 to be effective. We will also have to push for policy implementation to ensure promises made at the G20 summits turn into real funding and action. Not just promises, but real action. And strengthen our local institutions, right? Those are the challenges that we'll have to overcome to absorb efficiency, to absorb investments efficiently and avoid debt mismanagement. So those were the key impacts, guys, that are kind of identify for the continent being part of the G20 at this stage, right? Let's go back to the article. Africa's relationship with global financial system is characterized by significant imbalances. African economies often grapple with high borrowing costs, restricted access to international capital markets, and stringent conditions imposed by international financial institutions. For instance, Zambia and Ghana have faced severe debt crises resulting from unsustainable borrowing practices, compounded by volatile global markets and interest rate hikes by major central banks. And this is sad, right? Because when something like that happened, a country like Zambia, all the neighboring countries would be affected. I'm pretty sure Zimbabwe was affected by Zambia defaulting, Ghana, all the neighbors. So there's always a fear of contagion when something happened to an African country. And because actually we take debt for to build stadiums, for example. That's not a productive investment to borrow money for. You borrow money because you expect your income to grow in the future, they'll be able to reimburse that debt. But if you're taking debt to for as working capital, to pay the workers, to pay the government employee, it's gonna be difficult, guys. But we're here to look for solutions. We're not gonna be sad about, sorry about ourselves. We need to look into the future and believe that a way forward is available to us. Okay. Similarly, Ghana suspended payments on most of its 30 billion external debt in December 2022. Yo, suspended payments. So you guys have defaulted on 30 billion. That's not a good look. Sorry. Regardless, we say success don't need explanation, and failure doesn't need alibis. So when you're telling me that it's through economic fallout from the COVID-19, I'm sorry, but they don't care. The investors, they need their money to be paid. In May 2024, Ghana reached a memorandum of understanding with bilateral creditors, including China and France, to restructure 5.4 billion of its debt. This agreement enabled the International Monetary Fund's approval to disburse to 360 million under a 3 billion 3-year bailout program. So this is basically austerity measures. Guys, I'm going to talk about the International Monetary Forums in one of my next videos because I'm beginning to be suspicious of this group, right? To me, it looks like a vulture fund. They're just here to, they're vultures. When you're at your lowest, they just come to scoop. They're vultures. They scoop on the carcass to avoid like the spread of disease, basically. So anyway, sorry for another day. These cases highlight the pressing challenges African nations faced in debt management and underscore the urgent need for structural reforms to ensure long-term economic viability. Additionally, Africa's share of global credit flows remain disproportionately low. Despite the continent's immense growth potential, international investors remain risk-averse, driving up borrowing costs and limiting access to vital funding for infrastructure, healthcare, and development projects. This has left many African economies over-reliant on external aid and debt. Oh my God, this is so, I mean, it's gut-wrenching. It hurts me that we have to rely on begging and borrowing our future or bargaining our future, the future of the next generation, just to survive instead of looking for means to thrive. I'm not a rapper, guys. But while global reforms to create a more inclusive financial system are essential, Africa must also look inward to strengthen its financial architecture. Building a resilient African financial system will be the foundation upon which any global reforms can stand. That I 100% agree. Yay, yay, and yay. Right, guys? We need African financial system should be the foundation upon which any global reforms can stand. Right? What is a financial This is huge, guys. For me, this is an important point. This is an inflection point in the article, the financial infrastructure. So what is it? It's the systems, the underlying systems and institutions, no, underlying systems and institutions, also technologies that supports actually the financial activities of a country. So you have the systems, the institutions, and the technologies. That's the infrastructure. And what it does, it enables a smooth flow of money, of credit, and investments, also of payments, right? Because you have the technologies there. So I've put together the chart, this little graph for me that talks about that highlights why the financial structure is it's important. It's the financial infrastructure is important for any country or for any um, economic growth or development in general, because actually it promotes economic growth, right? It enables investments and business expansion. Oops. It ensures financial stability by preventing banking crisis and fraud. It boosts the financial inclusions by helping individuals and and companies to access credit and payments. And finally, it attracts foreign investment. If you have a financial structure in place, foreign investments are going to come back. Strong system increases investor confidence, right? If they know that uh, the system is in place, is strong, they're going to be willing to do business with you. And furthermore, I've also identified the key components, in my opinion, or of a financial infrastructure, which are here. For me, those are paramount. This is, yeah, the key component for any financial infrastructure. So you have the regulatory and supervisory framework. We start there, right? You need the central banks control monetary policy and financial stability. You need regulatory bodies, to oversee financial markets. You have, for example, the SEC in the US, the FCA in Europe. You have the deposit insurance. Make sure that the insurance from the debt, the deposit that you make, that you leave at your bank are incurred, right? You need that. That's part of the regulatory and supervisory framework. And then we go to the banking system. We need the banking and payment system. Oh, I have the circles. Yeah. Banking and payment systems, right? Sorry, you need commercial banks and central banks are part of it. They provide financial intermediation. They're the middle guy. Allocation of capital in an efficient way. You have the providers of capital, you have the seekers of capital. You go to the banking and payment system. Yeah, this also includes the payment networks. You have the SWIFT network, the Fedwire, to enable money transfers. You have mobile money actually here that's becoming big part on the continent, something that we need to leverage. We have, for example, M-Pesa in Kenya. I believe that M-Pesa is huge. It's a mobile money. It's a mobile application to expand financial access. The next part will be the credit and lending system. Credit and lending system. Here we have the credit rating agencies to assess the credit worthiness. We have, for example, Moody's, the S&Ps of this world, microfinance institutions to provide small loans to underserved populations, loan origination platforms, enable digital lending. For example, we have Lending Club, and then you have the capital markets, oops, capital markets and stock exchange, stock bond markets to enable companies and government to raise capital for the investment and the growth of the company. You have security depositories and clearing houses to ensure safe settlements of trades. For example, I was talking to a friend and was telling me a company on the continent dealing with cocoa, And instead of having futures, the farmers, they don't believe in futures because you can set the price today, but when the time of the expiration of the contract comes, the farmer will tell you, oh, no, this is not the price of the market. So there's not a clearinghouse that would ensure that both sides are actually, both of the transactions are actually fulfilled and settled. That's very important, as you can imagine from my example. And then we have the financial technology. Why is it a big circle? Go back. Oh my God. Financial and technology, the blockchain and cryptocurrency networks. This actually can change the way the infrastructure is made of because it can actually, um, the banking system can be, I mean, can become obsolete if the blockchain technology, comes into mainstream. We have the open banking APIs that allow secure financial data sharing. So open banking, it's basically if you have, let's say you have you have three bank accounts, you'll be able to see all three bank accounts from different banking institutions. You will be able to see all your three bank account balances from one bank. So you have bank A, B, C. So you open bank A, you're able to see all your information from bank C and B. That's open banking API. So AI-driven credit scoring to expand lending access, right? You have, for example, Alipay. You know, those are technology that we can use to bypass or to speed up our growth. African Union, the African Development Bank, and other regional bodies must play a more active role in that negotiations, pushing for multilateral mechanisms that prioritize African interests. Transparent debt management strategies can prevent future crises and build investor confidence. Simultaneously address the debt crisis and climate challenges. Debt for climate swaps offer an innovative opportunity for Africa. These mechanisms allow countries to restructure their debt in exchange for specific commitments. Interesting. To climate action. Interesting concept. So basically, climate becomes like a currency, such such as ecosystem restoration or investments in renewable energy. Several African leaders, including Kenya's President William Ruto, have championed this approach these approaches, which appear to be gaining traction in international forums. Again, that's why we need to be in those forums. We need to bring novel ideas such as this, right? That's why being part of the G20 for me is a big deal. High borrowing costs often stem from perceptions of risk. By developing a more resilient, integrated financial system, African countries can work towards more favorable credit ratings, thereby reducing the cost of capital. We have already kind of established that. Establishing a Pan African financial infrastructure, leveraging digital finance, and promoting regulatory harmonization will create an enabling environment for intra-African trade and investment, boosting growth from within. I'm a champion of boosting growth from within, guys. I believe we have the necessary market, the skills to be self-sufficient within the continent. Honestly, it'll be hard to challenge that concept. The African Union recent inclusion to the G20 marks a significant milestone as Africa's official representative in one of the world's most influential economic forums. The AU now has an unprecedented opportunity to influence global financial reforms. But then again, guys, we know that, for Europeans, if we go back here, let me just show you here. Oh my God, I don't want to go up. Okay, if we go on the map. If we go on the map, right, guys? We here as African, we're here. So they're telling us that the African Union. So my point is, I'm gathering my thoughts. Those guys here in purple, they are represented by the European Union. The difference between them and us, they are actually elected official representing them in the EU. Meanwhile, us, the African Union, it's actually subsidized by the EU. So I'm not sure when you say, so, you know, is it actually our voice or is it like a proxy for the European Union? Are we really independent or are we just going to follow what they tell us to do? That's why I'm also kind of skeptical. It's a good news to be there, but what type of ideologies, what type of commitment are we going to make? Commitment that favors the European Union or the African population? Because the African Union, to me, to be honest with you, I don't want to be harsh, but they're puppets. If you're subsidized by someone else, I'm pretty sure it's over 50%. You cannot be independent. So if you don't have independence, you lack credibility. I don't know about you guys. What do you guys think about the African Union? But to me, it sounds good. It looks good to be part of the G20. We feel like we're there, but are we really there? You know, are we there as ourselves or do we have a white mask? G20 represents around 85% of global GDP and 75% of global trade. This is particularly crucial as Africa faces some of the world's most pressing challenges, such as climate crisis, which disproportionately affects the continent despite its minimal contribution to global emissions. In 2022, over 110 million people in Africa were directly impacted by weather, climate, and water-related hazards, resulting in economic damages exceeding 8.5 billion. Oh my God. Despite contributing less than 10% of global greenhouse gas emissions, Africa is the continent least equipped to handle the adverse effects of climate change, which is true, guys. I don't know if there's like I don't know, man. If there's like a flood in my country, we don't have any equipment to look at people. We'll have to rely on external aid again. We'll have to beg for people, rely on charity. Man, I'm tired of that, guys. I'm tired of that. We need to be able to we need to be independent. We need to be able to hold ourselves up by ourselves, by the bootstrap, as they say. There's a temperature for a different organization. So everybody confirms that it's growing. It's going up and it's going to be more affected on the continent. Africa annual temperature. It's getting harder, guys. The African Union, the African Union's key priorities in the G20 should include advocating for global frameworks that provide equitable debt relief and restructuring mechanisms. Me, I've accorded 15% to that. This guy seems to be inclined to warrant that he warrants more, particularly for African nations disproportionately affected by global economic shocks. According to the UN Economic Commission for Africa, Africa requires approximately 1.3 trillion in annual investments to achieve the sustainable development goals by 2030. 1.3 trillion annual investments. I mean, this is just like, is this a joke? Well, we're going to find 1.3 trillion. I mean, we can produce that, guys. We can. I'm absolutely convinced. I'm certain of it that we can generate enough output. We can generate enough output to bring us that 1.3 trillion per year that those guys want us to invest. This community will be part of that drive. We are on our journey, guys. Welcome to the guild. Additionally, the AU should aim to secure the AU African Union should aim to secure increased access to climate financing, leveraging its G20 membership to ensure Africa receives its fair share of 100 billion per year pledged by developed nations for climate adaptation and mitigation. 100 billion per year. All of that should come to us. I mean, all of that should come to us. We've contributed the least and we're suffering the most out of the climate change. It's clear. So we should have at least like 75% of this pool of money. And we're not asking for we're asking for investment, mutually beneficial, not one-sided. Africa stands at a critical crossroads. While the continent engages in global financial reform discussions, it must also prioritize strengthening its economic foundations. Debt for climate swaps, equitable access to climate finance, and innovations such as digital financial services are not just tools but pillars of a broader strategy to build a resilient financial system. As Africa seeks stronger voice in the global financial system, it must remember that true reform starts from within. Oh my God, Abby, what a way to conclude. Yes, 100% it starts from within. Our infrastructure needs to be elevated. We need to put all those in place: regulatory and supervisory framework, a strong banking and payment system, credit and lending system, capital markets and stock exchanges, financial technology, fintech, and digital infrastructure. All right, guys, this is the end of the article. Let me know what you think. G20, next one. Bye bye.